Let's take a look at the sectors, because the one group that's still got the momentum, I love to see it when the semiconductors lead. They've just had a great month. All right, it's just fractionally positive, but they're real market leaders. Not surprising, industrials weak. Banks have had a tough day. Yesterday they had a tough day. Flattish today. Energy also a little bit to the downside. So what's moving stocks? A good thing to remind ourselves what the primary movers of the markets are. My opinion is the big driver of the rally is traders believe that the central banks around the world have their backs, whether it is in China, whether it is in the UK, whether it is in Japan, whether it's in the ECB. The Draghi pivot was a huge event a couple of weeks ago, or whether it's the Federal Reserve here in the United States. Central banks are accommodative, and that's the biggest supporter. Secondary is the belief that a trade talk deal will be happening. Obviously, we want to watch guidance. Now, I put up the earnings companies that came out today, or companies that gave guidance here. So we've already talked about FedEx with the weaker macro. BMW talked about a soft 2019. It got hurt, and the cars are all down over in Europe. UBS talked about slower capital markets. There may be specific stories there about the slower capital business overall. Samsung was talking about a sort of sluggish smartphone business. Not terribly negative. We kind of knew that. It's flattish, but that was out there. And, of course, UBS, we saw what's going on there as well. General Mills, I think the important thing is they had terrific commentary overall. So let's just look at where we are. Of the companies there are 6 companies that have February ending quarters that we would consider roughly in what we could call the first quarter overall. So FedEx was a miss by 2 or 3%. Okay, but look who beat. AutoZone beat, Costco beat, Adobe beat, Oracle beat, General Mills beat, and the average beat was by 9%. They're beating by much larger. This includes FedEx's miss. So my point here is we got these numbers for the first quarter cut to pieces at the end of the fourth quarter. The analysts came out panicked and then cut all the numbers. I think they may have cut so much that we may be getting bigger beats than anticipated out of the first quarter. And I know FedEx was a miss. I'm aware of that. I'm trying to look at everybody else besides Federal Express and see what's going on. So the hope here is you beat, and your guidance is not as bad as what you gave in the last quarter overall. So we've been talking about Micron this morning. Here's a good example. There was a lot of similarities with FedEx here, even though they're different businesses. China and Europe is a big part of the overall revenue package for both FedEx and Micron. Just like FedEx, Micron gave generally lower commentary in November, and then in December, they gave Q2 guidance below forecasts. Now, Q4, the stock was down 30%. That's exactly what FedEx was down in the fourth quarter. So what do we expect here if the pattern holds up, similar to FedEx? You expect them to give kind of weaker May guidance than was anticipated. That's what FedEx did. And they talk about the green shoots. The better second half of the year. That's the green shoots equivalent. I'm trying to paraphrase what FedEx CEO told Jim last night. So that's kind of what the pattern that we can expect overall, and see what's going on. We'll keep an eye on that. Micron, there you see that drop of 30% and the modest return that we've gotten back. FedEx, by the way, same thing. Where was FedEx? 225 in the beginning of the fourth quarter last year. It went down to 150 or so, and now it's 170 or so. So the return from FedEx off of its lows has been fairly modest compared to that big drop in the fourth quarter. The hope for the bulls here is that you see this 5% drop here today. Next quarter, the guidance is about in line with expectations. Right now, we're down 120 points.